Welcome back to the Social Universe, where you learn the secrets of the social media through the social universe, and in many cases, the secrets of the universe itself. We are going to be talking during this segment, and welcome again, Tony. Thank you for joining us and staying with us on the show. We're going to be talking about the individual tax return, and when you are doing your tax return and thinking about doing an individual tax return, some of the important things. But before we do, we did have one more aspect of guerrilla marketing I think it's important to mention. Tony, do you want to talk a little bit about your outreach with the local businesses that are near your franchises?
Well, I was saying earlier that we found in doing marketing research that most of our clients have their taxes prepared within a 10-minute drive of their home or their place of work. So it usually falls within your territory, that your client is going to be living or working within your territory. So that means they're also going to be using the services of other businesses in those areas, markets, shops, the dry cleaner, the donut shop on the corner. So we don't just go out and pass out a bunch of coupons to say, hey, can we drop these on your counter? We like to spend time with the manager, the owner of these stores, independently owned stores, and do an exchange of services. You know, we give away gift bags to all of our clients with the t-shirts and Liberty pens, things like that. And I like to include coupons, sales, gifts, or anything that from our local community partners, business partners, in our gift bags. So it's not only just advertising Liberty Tax, but it's also, you know, giving our customers maybe some information on stores or shops that they didn't even know about in their own neighborhoods that they could use. So it's an exchange of services.
Absolutely. Affiliate marketing, sometimes we refer to that. And most importantly, it's consultative guerrilla marketing from the standpoint of...
And it's free.
Yeah, exactly. Affiliate free, there's nothing wrong with that. Local businesses helping other local businesses. And that's that whole community, local community feel is something that definitely is part of the culture through and through of Liberty Tax, and I don't think that's ever going to go away. And it's a lot of fun. So if I am an individual who would like to file my taxes, what are some, during this time of the year, what should I be thinking about to make sure that I'm prepared for the upcoming year?
Well, if you're a wage worker, you get a W-2 at the end of the year. You work for a company. You know, check with your human resources department. Make sure that you're participating in any 401k or 357B, depending on what kind of agency you work for. Especially if your company matches funds. It's free tax-deferred savings for your retirement. Most of us know that it's probably not a good idea to try to depend on Social Security in your retirement. As somebody who's getting close to that myself, I'm not depending on Social Security to pay my bills in my elderly years. Sure. So you want to take advantage of as many tax-deferred savings benefits as you can. IRAs are okay. 401ks and anything that is contributed to by your company are the best, and you do have, I believe, not just to the end of the year, but you can contribute to 2012 up until I think March, and have it applied to your 2012 taxes. So max that out, and I think that cap is even higher this year. It's up around 16,000 that you can tax defer save in a 401k. That's very important.
It is important. And if you're thinking about doing any purchases, especially, for example, a car. I was just listening on the radio over the weekend, a car show, and they just discovered themselves that if you lease a car, you don't get the tax credit. The car dealership does, or at least the company that's providing the leasing of the car. Whereas if you buy the car, then you get to have the $7,500 deduction, something to that effect.
Well, you have the sales tax.
Uh-huh.
You can deduct your state sales tax. And so when you make big purchases, like a boat, if you've got that kind of money,
uh-huh.
or a car, or some other large purchase, you can take either take as an itemized deduction your state tax, your state sales tax, or your state income tax, one or the other.
Okay.
That's not really a concern for most people unless they also own a house and they pay mortgage interest, because that's the biggest deduction that most of us have, and that's what allows a lot of us to itemize our deductions, which gives us a much more beneficial tax tax package. But
Sure.
worrying about little individual deductions and charitable deductions and things like that, if you don't have a mortgage, it's kind of just a lot of effort for something that you probably won't have enough to not use your standard deduction anyway.
And that's kind of the point I'm making in general, is that create the strategy, and the strategy might be more simple than you would think sometimes.
Well, I mean, I tell people, they say, should I do charitable donations? I say, yes, you should, because you feel that you should, not because you're going to get a tax break from it, because you may not. It may not, you may not itemize. You may use the standard deduction. You may not have enough medical expenses to itemize. And most of us, and like I said, unless you own a home and you pay a mortgage, most of us don't have enough itemizable deductions to do that type of deductions from our tax returns. So we're spinning our wheels trying to figure out how much we spend on uniform equipment and how much we spend on this and that, and it doesn't matter, because you're not going to use that on your tax return.
And hopefully our listeners understand that difference. Is it's kind of 6 of one, half a dozen of another. You have two options: your standard deduction, which, do you know what that, I mean, it just depends.
It depends on whether you're single or married, filing jointly, or but roughly for most of your people out there that are married with dependents, it's around $11,000, $12,000. So unless you have enough other deductions to make $11,000, $12,000 in deductions, you won't itemize anyway.
Sure.
Again, a mortgage takes a big portion of that, because most people come in with mortgage interest between $5,000 and $8,000. So then they can add on their medical expenses and their sales tax
Sure.
from the new car, and
Then itemizing
Right.
starts making
Right.
more sense.
Exactly.
So especially if you own your home and have a lot of mortgage, you have that mortgage interest, then that probably puts you in the category where you can start itemizing and making a lot more sense. So if you do own a home, definitely come in before the end of the year. If you don't own a home, come in just to double check and give you the peace of mind that the standard deduction is all that's really needed. But come on either way and make sure that you kind of reserve that spot. What are some other things that, let's back up a little bit from the entire year. So, from January through December, if somebody wants to make sure they do the tax planning properly during each kind of season of the year, what should their thoughts be? I mean, we don't want to stress them out that it's a 12-month process, but as far as strategy development is concerned, starting January through December, what are kind of some highlight times that they should be considering?
Well, I prefer that people think about taking their tax advantages as early in the year as possible, especially things like contributing to a 401k. A lot of people wait and backload that at the end of the year and try to max that out at the end of the year, when they're losing all of the interest benefits of putting that money away as soon as possible. So I try to, when I was working a wage job, I maxed mine out before June, and then I got bigger paychecks the rest of the year because I didn't have any money taken out of it. So by Christmas time, I actually had bigger paychecks and I had more money because I'd already put all my money away in the 401k. You learn to live on what you take home.
Sure.
You can say, I can't afford that, I've got to pay for this and that. But the fact of the matter is, you will learn to live on what you take home. So you should pay yourself first, and then learn to live on what you have left over. And for an individual, when you have small businesses, someone who's filing, say, a Schedule C because they do an individual tax return, they don't have an S Corp or corporation or LLC or anything like that, but they need to be very vigilant about their record keeping, even if it's just a notebook or a calendar where they keep track of their pay for mowing lawns or for cleaning pools or for whatever, and they keep their receipts from their supplies for those types of things, gas receipts for lawn mowers or anything like that. They just need to keep those records together and not in a shoebox in the bottom of their closet. It's really important that they have neat and orderly records, because if and when they get audited by the IRS, because the IRS doesn't just audit for cause, they do random audits on roughly 17% of the returns that come in for no reason, just as a random audit. So if you don't have your records together, trying to scramble it together when the IRS calls you and says you have 2 weeks to present your records to us, and everybody panics. Well, you can't just bring a shoebox into the IRS. They really start looking over your returns at that point. So it's very important that you keep consistent, simple and consistent records.
That's where some of that business networking comes into play. That when you're and you can ask for a good bookkeeper who might be able to keep your
Absolutely.
shoebox organized.
Well, and a lot of the franchisees, I know I do, and I have a couple of other friends that are franchisees actually offer bookkeeping services for that reason. We have so many of our clients come in on April 14th with just a mess that should have been put together all year long, and so we started offering bookkeeping services to people, or at least training on how to do it themselves properly. My company offers a free 2-hour consultation, so I can look at what you do, what you're required to have under IRS regulations for your type of business. It's very specialized, it's very individualized. You can't just say, here's a list of things you need to do. It's not the same for everyone.
Sure.
So if you want to use our services, that's fine. Most of my people, 30-40%, I just tell them, you don't need me. This is what you need to do. You don't need to do QuickBooks and get fancy and learn how to run Peachtree and everything. This is just what you need to do. It's just simple record keeping. Here's your book. Here you go. But it helps them to know that they're doing it the right way, and they're not afraid if they get a letter from the IRS.
I think 2 hours is very generous. So yeah, definitely come on in and take advantage of that 2 hours. If you have an unorganized shoebox, come in this side of the year rather than next year.
Absolutely. Well, honestly, we're all busy. I mean, you'll be surprised if someone comes in with their shoebox, and I say, I can't help you.
Right.
It's April 14th, and I've got 30-40 returns sitting in my queue waiting for me to review them for tonight.
Yeah.
So, you have to file an extension, and I'll see you in October. Oh, speaking of which, if you file an extension, it's due next week.
yeah. And by the way, filing extensions is an option. What about filing an extension? I don't know if it's something you're talking about openly. Are people who file extensions audited more or less than those who file in the
No, because the extension is nothing more than asking for a deferment so you can get all your paperwork together to get it filed properly. It doesn't defer. You don't get. It doesn't defer your late payment penalty. It doesn't defer your interest on if you owe. All it does is stop you from getting a failure to file fine, because there is a penalty for not filing on time. Gotcha. And if you file an extension on April 15th, this year it was April 18th, you won't get that penalty. But you're still going to be accumulating interest and late payment penalties, so, and for no other reason than you didn't get your paperwork together on time. And that's why getting this stuff done early
absolutely
is much more. Even if you owe, you're not getting an extension to pay, you're just getting an extension to file. If you think you're going to owe with your estimate when you file an extension, you need to send them a check, because they'll start penalizing you for not payment, not for underpayment.
We're going to end this segment with this thought, that there is a product that Liberty Tax has to sell and it doesn't cost you anything. It's called Peace of Mind. If you come in early, they'll give you all the consultation that you need, so that you have that peace of mind for 90% of the year that you've done it properly, and they don't charge you extra for that. So come on in. And what's that phone number before the end of break?
The corporate number for all information is 866-871-1040. That makes it easy.
Okay, very good. Thank you for tuning in. This is Kurt Wilhelm with the Social Universe, and don't go away. We'll be right back after the break.